stocks have worst day since October over coronavirus worries. Just as the world economy appeared to emerge from the uncertainty of the trade war, the spread of the dangerous coronavirus in China has pierced the calm that had settled over financial markets. The S&P 500 closed down 1.6% on Monday, its second straight drop, which wiped out much of the market's gains since the start of the year, and its sharpest decline since October 2, when the trade war was stoking fears of a domestic slowdown. President Donald Trump announced the Phase 1 trade agreement with China on October 11, contributing to weeks of placid trading that pushed stocks to a series of records, making the coronavirus-driven slump all the more jarring. There was already reason to question whether markets were a bit too buoyant, said Patrick Chovanec, chief strategist at the investment advisory firm Silvercrest Asset Management. Sometimes it takes something like this to refocus their attention on potential downsides. Stocks with close ties to the Chinese market or the travel industry, or both, bore the brunt of the selling. American Airlines fell more than 5%, and Wynn Resorts, which operates casinos in Macau, a special administrative region of China and a gambling haven for Chinese high rollers, tumbled 8%. Companies with links to China's key role in the global technology supply chain also slumped. IPG Photonics, which makes lasers for cutting and welding and makes a significant share of its sales in China, fell more than 6%. Two chipmakers, Applied Materials and Skyworks Solutions, which sell heavily in the Chinese market, each fell more than 4%. The S&P's drop followed declines of more than 2% for the major stock benchmarks in Europe. The benchmark Nikkei 225 index in Tokyo also sank 2%, while many other markets in Asia, including the Shanghai Stock Exchange, were closed for the Lunar New Year. China extended the Lunar New Year holiday by 3 days until February 2 in an effort to limit travel and contain the outbreak that started in the city of Wuhan. Concerns about travel restrictions, the Chinese government has effectively sealed off Wuhan and other cities, affecting 56 million people, helped push down oil prices and shares of major oil companies. Brent crude, the international benchmark, slipped below $60 a barrel, its lowest since October. Prices have declined about 10% since January 17, when China confirmed multiple deaths from the virus. On Monday, the S&P 500 energy sector was down 2.8%. The outbreak has come at a crucial period for Chinese business, which could complicate official plans to reinvigorate growth in the aftermath of the trade war tensions of the last 2 years. The country's economy, trying to shrug off its worst slowdown in nearly 3 decades, is already hurting from the virus effects on travel and tourism. And consumer spending, which helps. For more on this story, visit the news article link.